Equity markets sold off at the beginning of the year in what appeared to be a delayed reaction to the Fed's interest rate liftoff. The sell-off gained momentum and caused stock markets in the Western Hemisphere to lose between 10 and 20% of their value by mid-February. Markets stabilized in March and then recuperated some of their heavy losses. The biotech sector lost significantly more due to profit-taking after years of outperformance and due to uncertainty created by a running debate among presidential candidates about the increasing cost of healthcare and prescription drugs in the US. The NBI retreated by almost 23% in US dollars in the first quarter of 2016, one of the largest quarterly declines in its history. BB Biotech shares declined 16.5% in Swiss francs, but still outperformed the NBI by about 10 percentage points. BB Biotech shares performed better than the investment portfolio, as its NAV declined by almost 30% over the quarter. This drop in NAV is mainly attributed to the declining share prices of many of our investments in small and mid-cap companies. As a result, the discount on the share price versus the net asset value narrowed to almost zero. We made few changes to our portfolio positions in the first quarter. Positions in existing US small and mid-cap companies, Ionis and Insight, for example, were increased, and amongst other shareholdings, Swedish Orphan Biovitrum and Actelion were reduced. Successful innovation crowned by positive late-stage clinical trials and ultimately regulatory approvals will continue to be the key to success in the biotech industry. Unlike in previous years, stock markets showed an asymmetrical reaction to news of the milestones achieved by biotech companies in the first quarter of 2016. A persisting outflow of investor funds put shares under pressure, even when positive news were announced. More often than not, a brief upward move was followed by more profit-taking. Among the companies reporting positive news was Gilead, which is seeking to maintain its leadership in the HIV market with its TAF-based single-pill regimen. Actelion also received a positive CHMP opinion for Selexipag, but we don't expect market launch in Europe until the second quarter of 2016 due to regulatory delays. And Novo Nordisk announced positive results from 2 important clinical studies that could widen its share of the diabetes market. Looking back, most large caps corrected by 10 to 20% during the first 3 months of the year. Most mid caps corrected by 20 to 40%, and many of the small caps lost upwards of 50% of their market value, even though more than a few of them reported fundamental progress. In our view, the many milestones achieved have not yet been fully factored into company valuations. Share prices are likely to be marked up again as soon as biotech markets regain traction and truly acknowledge the strong fundamental developments. We expect 2016 to be another volatile year for investors. News flow will pick up as the year progresses and should generate considerable upside potential. Among the companies in our portfolio, important regulatory milestones are anticipated for Intercept, Gilead, Neurocrine, and Radius Health. Significant clinical readouts will also have a big impact on share prices, for example at Tesaro, Clovis, Insight, and Celgene. Valuations are well below the levels seen in previous years. As stock markets eventually stabilize, M&A activity is likely to pick up again.